All right, guys, welcome to my YouTube channel. If you're joining for the first time, this is TushFX, and I'm your host for today. We're just going to do a quick analysis on XAUUSD to just see what will be happening for the week. I analyzed the charts on Friday, and it played out exactly the way I wanted it to play out this morning or last night when the market opened. And I just want to share with you guys what I am seeing in the market and what I believe the market is going to do with the top down analysis. Now, basically, most times because I'm a day trader, I usually just look at the charts basically from the 4 hours time frame and see what is the 4 hours doing. At the moment, we can see the 4 hours is currently bullish. That's what we can see at the moment right now. 4 hours is currently bullish. It was trading lower, low, lower, low, lower, lower, low, lower, high. It was trading what? Lower, low, lower, high, lower, low, lower, high, lower, low, and it now broke this previous lower high, created the higher high. Now, at the moment, it has created the lower low, but it has not yet broken this high for us to determine if it is going to continue going up or if it's going to push down. So at the moment, we're stuck in between this place right now. So, but for what we can see, we can identify that okay, price have retested because price didn't come back to take out this low. So technically, we're hoping that price is going to take out this high or probably pull back a bit and push up. But at the moment, we don't really do much analysis on the 4 hours time frame just to check and see the direction of the market. Where is it going to? So now just to see the overall trend of the market, how is it like? Now, on the 1 hour time frame, that's where we basically check, okay, what is market doing? Now, it is very clear right now that price is currently trading what? Higher high, higher low, higher high, higher low. Price was first of all trading a higher high, then it broke this particular zone. Okay, let me just start it all over so you can see it. Price was trading what? Higher high, higher low, higher high, higher low, higher high. Then price came back, broke down all this zone. It traded lower high and lower low. Though the pullback was not really that much. Lower low. Now price broke this particular high, created a higher high, higher low, and higher high. And what are we expecting? Now price will actually come back to create what? A higher low and to retest this trend line for the third bounce to create what? A higher high. So that's what we're looking for right now on the 1 hour time frame. Now, if we still look at the 1 hour time frame, most ICT trader will tell you that all these places that they are, is it liquidity they call it? The price came to sweep all this liquidity here. Price came to sweep all the liquidity here, and there's a fair value gap here as well. The price came to test this fair value gap and sweep up all this fair value gap, something like this. But it didn't really touch the fair value gap if I'm not mistaken. Don't really know much about their fair value gap, but this is it. And price is pushing up right now. So now 1 hour time frame, we are bullish. So this is the direction of the market, and this is where we draw most of our chart pattern. 1 hour time frame, we are bullish. Now, if we go to the 30 minutes time frame, I don't usually use it most times, but most times I just check it. We'll see that okay, 30 minutes we're also bullish. So what are we waiting for right now? We're waiting for price to come back and retest this trend line. There's a trend line here, and we're waiting for price to come and retest this trend line. It has have two. Two touches. First touch, second touch, and hopefully that it should come and have the third touch. So this is just means of manipulation, but because there is a support here, and that's why price needs to react. But let's go to the 15 minutes time frame. Let's scroll and see. Okay, yeah, this is it. 15 minutes time frame. This is the 15 minutes time frame. Yeah, this is a nice trend line, and we're expecting price to come and retest. Let me put a Fibonacci here and see. It's just you just make it very simple. So this is 78% Fibonacci, and all these plays are the fair value gap from 67% from up to this extent. So we're expecting price to pull back down to come and retest before going up to either 78%, which is the one I usually wait for, or the 61%. That's the one that we're expecting price to come and touch. Is it that price touch this place, pull back, or touch this place and pull back? But because there is a trend line here, we don't really know how it's going to do. Maybe price is going to touch, sweep liquidity, touch it, and have a week back and close in between the trend line. That's what we are looking for right now, for price to just do. Once price get to this extent, what I'll be looking out for is to just to go to 5 minutes and look for a chart, a change of character or change of structure, and look for a bearish and bullish engulfing to start buying. But what's most trader will do right now, they will just wait for price to come and break out this structure here, this low here on the 5 minutes time frame, to sell down. So if they can get now, if you see price is retesting this minor structure now, so if they can get something like a bearish engulfing here, a bearish engulfing candle somewhere here now, once they get this bearish engulfing candle now, and you see they will enter the sell, put their stop loss below here, something like this. Just enter the sell, put your stop loss. Very, that's for scalpers. I'm just saying for scalpers, put your stop loss here. Use like 70 pips stop loss and target this whole zone here. Get like 1 ratio 3.5 or 1 ratio 3, just to put it here. 1 ratio 3, that's about 220 pips. That's what we'll be targeting for a quick sell. But I just don't want to scalp. I will just trade the market the way it comes. But if the market decides to come and take out this high, they will now have a new structure on how to analyze this market. Ours is just to analyze and watch and allow the market to do what it needs to do. That's just what we're going to do. We're not going to make it. We're going to make it very easy and simple for us, and see how the market is going to look like. Now let's check DXY and see what DXY. Yeah, this is the analysis I was doing yesterday. Price was somewhere here on Friday night when the market closed. I knew that price was going to push back. It touched this trend line. Now it has broken the trend line, but we don't know if this one is a fake breakout or something. This is a 4 hour time frame. Now on the DXY, I like using the higher time frame to do my analysis, most especially the 4 hours and the 1 hour time frame, just to see where the market is heading to, what is the market trying to do. Most times I still scale down to 15 minutes, but because I'm not taking any entry, I just use the higher time frame to just determine how the market is going to go, or what the market is going to do. So the market was somewhere here on Friday. You can see this whole gap. You can see this whole gap that happens here. So this was the last candle for Friday night. And when the market opened on Sunday night, it pushed down back to this trend line to retest this trend line. And once it pushed back, that was why gold pushed up. If you see, the price was somewhere here on Friday. And when the market opened, the market pushed up, came back to retest this resistance that is kind of a minor neckline of an. It's not really a fake head and shoulder pattern. Not really fake, not really well structured head and shoulder pattern. If you go to the lower time frame, you will see like 30 minutes, you see a minor head and shoulder pattern. Yeah. So that's where price came to retest. That's where price came to retest. You can see left shoulder, head, though it didn't break the neckline. That's why I say it's an ugly head and shoulder pattern. Now, let's say right shoulder, then boom to the downside. Now, price is back here again now to retest it. So that's just it. So back to the DXY. So what are we expecting now? Price is already at this neckline here. So if price keep dropping down, then you see that this is the first touch. Let me extend it properly. Sorry, guys. Yeah. Now we don't allow the price to enter in between the. Let me push it back a bit. Yeah. So it does not really touch the body. It does not enter the body, but it can go in between the trend line, but not the body of the candles. Now this is the first touch, second touch, third touch. So if price should break it on the fourth touch, it's normal. So we're expecting price to just, if it breaks it and close below this place, then price will keep dropping. And once price keep dropping, that shows that XAUUSD is still going to keep buying. That's just it. XAUUSD is still going to continue what? Buying. All we're going to do is just to be patient. We've done our analysis. Is it that the price get to the 78% retracement to buy, or comes back to the 100% and retest this what support zone here and buy? back to the upside. So we just need to wait. Today is Monday. We don't need to rush anything or try and looking for a scalp to make. Just like as I told you guys that these 5 minutes now, if you close dodgy and another one comes and close below here, you see most scalpers will start selling the market because they know where the market is going to sell to before you could start buying. Now we are on a bullish trend, and it's good for you to stay in the with the trend. The trend is your friend. So why should I sell short when I know I can always buy long? You understand? If you even put your Fibonacci, I think this place should be around 38% retracement. The price is reacting on right now. Price is even 50%. It's reacting on 50% right now. But most time, 50% is not usually too strong. It might end up pushing up a bit just to deceive people that, okay, I'm buying, to come back and sweep their stop loss. So all we need to do is just to be patient to see if we can get 61% or 78%. But the one I usually use most times, all the time, is 78% because those ones are. So if I should use 78%, I enter the trade, put a long on this particular zone here. Then my stop loss will not be below the 100%. That's about 200 pips. Then I'll be targeting the previous high. That is the current high, which is like almost 500 pips or 490 pips. And if you want to extend a bit further, you can just put it at minus minus 27. That's over 600 pips. So instead of me to catch a little pips, why don't I just be patient to catch either 500 or 600 pips? So that's just the analysis for today. And if you've watched this video up to this extent and you like what I share, please help me with the favor of liking, subscribe, and leave a comment on this video. Thank you very much. You can also join my Telegram community where I post all the trade I take. If you click on the link in the bio, you'll see my Telegram channel. Thank you very much.